Hi, my name is Jerry Frank and I'm co-founder and CEO of AssetRover. And today I am here with Marcia Correll. Hi Marcia, how are you?
I'm great, how are you?
Good. Well, thank you so much for taking time to meet with us. We're going to go through a series of questions and we'll start now. So tell me a little bit about yourself and what brought you to the banking industry.
Well, I actually went to school to be a music teacher. That was my sort of my dream. And by the time I was ready to do my student teaching, I worked my way through college, and I started as a teller at a local savings and loan. And by the time I was ready to do my student teaching, I would have taken a $10,000 pay cut to go into teaching versus what I was making in banking. Mm-hmm. Not that bankers make a lot of money, but it was, at the time, the starting salary, I remember, for a school teacher was around $9,800 a year. So wow. I wasn't prepared to take a pay cut because I had student loans. So I stayed in the banking industry, and I worked my way up in a variety of positions, started as teller, became a financial counselor, and worked my way up into commercial lending, and I love it. So,
okay. All right. So your entire career?
My entire career. Banking.
All right. So one of the things that we're trying to do in this video series is help people align themselves with the group of people they want to surround themselves. And how would you recommend someone finds a banker to work with?
Well, I think I feel like this process goes hand in hand. You need to find a banker that you can work with, that you will work well with. You also need to find a bank that you can work with. Mm-hmm. And generally, if you find a banker that you can work with, most of the time the bank comes along with the banker. In terms of finding a good banker, I think asking your friends, family, asking someone in the business that you want to get into that has had success, ask them who their banker is. Oftentimes asking questions will lead you to the right person, and it's not unheard of to meet with a couple of 2 to 3 different banks or lenders before you find somebody that you can work with.
So do you recommend they just set up a meeting and say, lay it on the table, I'm looking for a banker to work with?
Yes, absolutely. Share your plan with them. Ask them to give input into your plan and what they might change. Ask if it's a good plan. There might be some things that you're missing from your plan, and they might be able to help you set some, bigger goals in terms of helping you become more successful.
Mm-hmm. And so when they're looking for this banker, do you recommend they start the process of looking for a banker before they find the property?
Absolutely. I'm one who, and anyone that comes to me, they will know that there's kind of a process to go through, but there's also a team that you need to build. And I use the term having the right people in your hip pocket to be successful. I believe having the right banker, and there are 3 other key people that I think need to be in that hip pocket, and definitely the banker is one of them.
So who are those other 3 people?
Banker, a good attorney, a good insurance person, and a good accountant. And if you have those key people in your hip pocket, it's the recipe for success.
Yeah, I agree. And how do you serve an investor differently than you serve a regular home buyer?
Well, when someone comes when someone's purchasing a home, there are a couple different ways that we serve them differently. But someone that's purchasing a home, personally, they're looking to live in a home themselves. Mm-hmm. First of all, in terms of the application process and buying a home, the disclosure process for buying a home personally is much different than it is on a commercial basis. Mm-hmm. If someone's buying a home for investment purposes, it's truly considered a commercial loan. So we don't have a lot of the same types of disclosures. Mm-hmm. Products, generally when someone's buying a home for themselves, they can go up to a 30-year fixed rate loan. When they're buying it on a commercial basis, generally the longest the rate will be fixed for is 5-year period, because most of those loans are held in-house at the bank because they're in the commercial portfolio. So you will generally run your projections for 5 years at a time as far as interest rates go, and then try to project out what they might be in 5 years for the next 5 years.
Right. Okay. How do you handle situations where an investor is buying a property that could either be something that there needs to be rehabbed, and they're going to hold it, or rehab and they're going to flip it? Is there different things that you take into account?
If a new investor is coming to me and they're trying to determine, should I flip a house? Should I rent a house? I think what I look at first is, what kind of capital does that investor have? Do they have cash proceeds? If they have some cash to invest, they might want to look more long-term. I tend to look at rentals as a long-term investment, and a house that they're going to flip as more of a short-term investment, that they can continue rolling the equity that they've generated into another property. So if someone comes and they maybe have $20,000 that they want to start with, my recommendation is, let's try to look at maybe seeing what you need to have for long term. What's your goal over the next 2 years? Maybe you flip a few properties, and so that you're building some capital that you can inject into some rental properties for longer term.
And is it possible? So if you're getting a loan for a rehab or a flip, is it possible that you can get additional cash to help to cover some of those rehab costs?
Yes. We'll use an example. Let's say you're buying a property for $45,000. If you have 25% cash to put, and you're not sure at this time if you're going to rent it or flip it, but you really want to build some capital, so possibly we'll flip it. Put 25% cash into the project. If you're making improvements and the assessed value of that property is $100,000, so you think the end value may end up being $110,000, that's what you're going to list it for, you can generally borrow up to a certain percentage of what that future value will be. Now, when you do that, even though you put your cash down, the bank generally will control the proceeds of how those are paid out. So they're not just going to turn that cash over to you. You'll make the improvements, you'll bring the invoices into the bank will pay the bills. So, but there's definitely room to borrow money for those improvements, as long as you initially have your 25% cash down into that project.
Okay. Is it possible to start in real estate with zero money down?
Well, that's a question that I have been asked before. I think if I would have been asked that question 10 years ago, I might have answered it a little bit different than I am now, because as you know, we've been through one of the worst economic crises since the Great Depression. And from a regulatory perspective, many things have changed. So I guess if I were asked that question now, the most important thing would be to look at the financial situation of your borrower and try to determine if that's possible. Somehow, in some way, shape, or form, we have to show, at least on that initial project, if they're purchasing a property for $40,000 and let's say it's a foreclosure, we need to show 25% equity into that project. It is possible to borrow, as I mentioned before, for some of the improvements. So I feel like if someone doesn't have 25% on those on something small like that, they need to probably work to save that. Sometimes we can utilize equity that they have in other assets in order to get that down payment. So it is possible, but again, it depends on what their personal balance sheet looks like and what can we utilize for that 25% cash down payment. I wouldn't say yes, but I wouldn't say no either.
Okay. All right. Thank you. Can you share some eye-opening experiences that you have had while working with investors?
Sure. I would say probably the number one eye-opening experience that I've been through in my 30-year banking career, and I just told my age, didn't I? Would be that sometimes economically things can change overnight. And I think we all experienced that on 9/11. We lived it, we saw it, and from a banking perspective, it really changed our world. It changed the world that we live in, changed our economic world. And I spoke of some of those regulatory changes that have been made over the past decade or 15 years, and those are, I watched literally from the construction industry, and I do some construction loans too. Houses that were selling and that were very hot, the following day were no longer hot. Mm-hmm. So you have to know what you're buying in terms of the price range of home. Mm-hmm. You have to understand and have a plan for what will happen if these are no longer selling tomorrow. Mm-hmm. And for in the investment world, if you're planning to flip a property, and tomorrow you wake up and that property is no longer selling, you have to go to your plan B, which is generally renting that out. Mm-hmm. Usually, in my as I've been working with this for a number of years, if you can't sell a property, you can typically rent it. Mm-hmm. One area is hot, one is not. Now, that's not to say that couldn't change overnight too. So mm-hmm. you have to be aware of what is going on around you, what the economic situation is. Another, aha moment that we had here in Cedar Rapids was in 2008. Mm-hmm. We suffered a flood and we lost more than 4,000 single-family homes. Mm-hmm. So from a rental market perspective, it became hot overnight. Mm-hmm. So you just have to be aware that there are things economically that can change the entire industry in a heartbeat. Mm-hmm.
Yeah, I didn't think about that. Mm-hmm. 2008 would have been quite profound.
Yep, change Cedar Rapids.
Mm-hmm. Do you have any words of advice for new investors as they're getting started?
Well, yes, I do. I go back to my making sure that you have your 4 key people in your hip pocket. I also think it's important, especially if you're going to hold on to properties as a long-term investment, that once you start to accumulate properties, you absolutely calculate into your cash flow coverage the use of a property manager. Mm-hmm. It's so easy when you're buying properties to think, I can do this. But if you haven't done it before, and when you start getting those calls, when the roof is leaking in the middle of the night or whatever it might be, you'll recognize very fast the importance of having a property manager. In reality, too, they will keep you on top of what the most current rents are, mm-hmm. and whatever fee that you're paying for it will generally pay for itself, because you'll probably your vacancy ratio will be lower. Mm-hmm. Secondly, time is money. If you're making those improvements on a project, I tell every investor, time is money. If you think it's going to take you 4 months to get those improvements done, you need to try to revisit your plan and see if you can get those completed in 45 days, because time is money. Mm-hmm. Those are probably my 2 biggest pieces of advice. Maybe third, go slow. I've watched very aggressive people who had plenty of money, plenty of capital into projects fail because, not plenty, but I've watched a couple of them who wouldn't listen to the advice of the experts around them, and they went too fast, tried to manage properties on their own, and they failed. Mm-hmm. Or they got overwhelmed and ended up selling at a loss. Mm-hmm. So go slow and make sure you understand what you're getting into. When you buy, when you're looking at a property, make sure you take an expert with you if you don't have the expertise to uncover any hidden secrets in that mm-hmm. house that might cost you a lot of money. Mm-hmm. Probably a final piece of advice would be, if you're making improvements on the property, most of the investors that I have seen that succeed do a lot of the work themselves. They're not afraid to clean, mm-hmm. Pull out landscaping, paint. Now, if you don't have the expertise doing it, that's one thing. But if you're going to subcontract every piece of that out, you're going to build your business and your net worth a lot slower than you would if you were able to, if you have the ability to put some elbow grease in and paint and, refinish some of the woodwork yourself. Mm-hmm. But again, if it's going to take you 4 months and someone else could do it in 2 weeks, time is money.
Mm-hmm. Okay. Any last words?
No, thank you.
Thank you very much.